In our immediate previous video, we spoke about market structure, under which we spoke about what makes up that market structure. We spoke about the impulsive moves, we spoke about trending market moves, and then also we spoke about untested levels. So in case you've not watched it, make sure you watch it so that you can understand this video, right? So in this video, it's like a continuation of the previous one, so that because everything that we post here is what we actually use in our daily lives of trading. So we're posting what is related, right? So if you've not watched the previous one, make sure you first watch the previous one. Or if you can relate things quickly, make sure you, after watching this one, make sure you watch the previous video, right? So in today's video, I'm going to be speaking about what we call change of trend. Now, under change of trend, we're going to be speaking what should first happen before you consider the change of trend has happened. Now, change of trend has been given many names. Some people call it change of character, some people call it change of word, break of structure. But if you put these two things together, you find out or you get what we call change of trend. Change of trend simply means that if the market was going downwards, making lower lows and lower highs, it means that we're looking for the opportunity to take this market at the moment whereby it starts moving upwards, right? That's what we call change of trend. The process or the act of which the price is changing from making this downward movement to the act of the market making this upward movement. This is what we are going to be talking about today. So make sure if this is what we'll be looking for. Most of you have asked us in emails and also some comments that we have spotted. You've been asking, you cannot identify when the market is changing. You know how to break down the market, but when it comes to identifying when is the market actually changing, you find difficulty. So make sure you give us the likes button, as it helps this video reach as many people as possible, as who may need it just like you do. So as usual, we're going to use our same method. We like using examples that we have broken down. We spoke about GBPUSD in the video that we spoke about entries. So also you can watch that video in case you didn't watch the breakdown, whereby we expected the market to come back to retest this level before we can go higher with it. That we did a breakdown on that, right? The entry video. I'm just going to attach it somewhere up in the top right corner. So not wasting time, before we even go into the recap of that video, let's first speak about what you need to look out for the turning point to be valid or to make more sense to you, right? So let's assume that you've done your analysis and you have your W, for example, and the market has come to retest this point here. One thing you have to put into consideration is that, let's say this is daily. If this W here has happened in a daily time frame, right? If this is daily, when you see that the market has touched this area of interest, because it's your area of interest and you want to buy now, right? And maybe you're targeting a top of this structure, of this shape, sorry. You're targeting this top here. Of course, also this turning point is a structure. And the market has touched this neckline here, the neckline, which is your turning point, which is your area of interest. So when the market touches your area of interest in the daily time frame, you have to switch to the next lower time frame to see how the market is moving. Now, what are we interested in here is to see this movement downwards here, this movement here, right? Because in a daily time frame, it may be one candle, or there may be two candles or three. But actually, when you go to the next lower time frame, like H4, you may find out actually this movement downwards is a whole trend. It's making lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, right? So actually, as the market is coming down, you can even take the sell downwards. For those who trade reversals or retests, you can actually you can even use trend lines, first touch, second touch, to take a trade up to this target down here, right? But like I always mention in almost all the videos, in case you've not traded for some time, or you've not put your rules together, you're not comfortable with them, you're not familiar with them, do not use this. Do not trade reversals. Do not trade retests. Please trade continuations. Continuations are very easy. But now also trading continuations is tricky when you don't understand this part. Are we together? So when you see this in daily, this is your area of interest, this one here, right? When the market touches your area of interest, switch to the next lower time frame. For example, the next lower time frame to daily that we use, of course, there's H8, there's H12, but the next lower time frame that I do recommend you check is H4. So when you go to H4, we're interested in seeing a trending market. Now, personally, I love H4. It's one of the best entry time frames that I know of, that I've been using, that is more accurate, has less noise. But in case you're not okay with that, you can use also H8. But when you don't see clear trend in this movement here, you can go to now what we call H1, right? Now, when you go to H1, we're only interested in checking out a trend here. Why are we interested in checking a trend? Because we are going to use this same movement to take the trade upwards. For example, we want to take the buy. But we're not going to take the buy when we don't know what happened in this move here. So for us to take a buy, we need to know which was the last structure or the last turning point that the market made here that buyers were, to show that buyers were in the market. Are we together? For example, the market is making lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. So we're interested in this last structure that the buyers push the market up before the sellers coming in. So we shall be interested in the market taking out this area here before we can get interested in the market, right? So if the market can take out this area, that's how we take in a trade. So some people take in trades immediately after this level has been taken out, that high there has been taken out. Others wait for it to make a weak momentum retest, which I do recommend. But if you've been doing it for some time and you know there are certain candles that you're used to or you're used to seeing in the market, you can take your trade after the break of this level. But the best way is to wait for the market to give us a weak momentum retest, either to retest this untested level, which is one of the best entry levels that I've taught you guys on this same channel, or you can just wait for it to retest this point here and have a bigger stop loss compared to this person who's waiting for the untested level. Those are the two ways, right? So this is what we're going to be doing today, and I'm going to be showing you practically. It's exactly the same method that we use there. And these are the same things that happen everywhere. No one should be telling you that there's a strategy for this. As long as something involves price, it's going to move the same way. Are we together? Just understand structure. Understand turning points. That's structure. Understand impulsive moves. Understand all that, right? So that's the first thing that I want us to understand. Let's just re-explain it so that you can understand in an opposite way. We are saying that if the market gives you a shape like this, let's say this is weekly. The first example I used was daily. This is weekly. And the market has pushed down like this, right? And the market has retested this neckline here. Now, in weekly, you may not be able to see that the market is actually trending to come back to retest in this area of interest of yours. Remember, this is your area of interest you're looking for. The sell downwards, maybe to target this low here. Are you getting it? So when the market touches this point here, when it touches this area of interest of yours, you switch to the next lower time frame, which is daily, right? Now, in daily, we're interested in seeing how was the market trending here. When you see that the market was trending, we're interested in checking. The other point was we're changing from a downtrend to buying. Here we're changing from uptrend to selling, right? So we want to identify the last low in this uptrend so that we can take our sell. Are we together? So in case you do not see a trend in daily, because sometimes also it may not be clear that the market, what you're interested in seeing is higher high, higher low, higher high, higher low, higher high, higher low, higher high. Sometimes also daily may not show you clearly. So what do? You switch to H4. I love H4 so much. I don't know how much I can stress that. It has less noise and everything. Even if you're going to use minute time frames like minute 30 or minute 15, minute 5, make sure you mark the levels in H4. You will rarely go wrong. You will go wrong, of course. You will lose here and there, but overall you will be profitable. So this is just what I did first show you. This is the first step. Now, the second step is you're going to implement what we spoke about in the previous video. Now, if the market has broken that high or that low, for example, in this case, we're looking for the market to break this low. So if the market breaks that low, that's when you have to implement these things. How has the market broken it? Has the market broken it with an impulse? If there's an impulse, you're looking for imbalances or you're looking for what we call fair value gaps. You guys have given them very many names, right? No matter how you want to call it. Personally, I like using the Fibonacci retracement tool so that I can identify the area of interest, whereby the area of entry in this case, since I'm going to take a trade, where the market could retrace to, so that I can take the trade with very minimal risk. Remember, as a trader, you're not looking for perfection. You're looking to take trades when you're going to risk less money. Of course, the type of business we're in is all about risking, but we want to risk very minimum, right? So this is all theory. I hope it has really sunk in. Now let's go and see exactly how we implemented this on GBPUSD. Like I told you, we did this in the video of entries. So make sure you watch it. I'm going to attach it. Just check in the top right corner. It's there. Now, we spoke about this GBPUSD, whereby we said that the market had broken above. It had broken above this level. You see this as a trending market, higher high, higher low, higher high. Very perfect trending market, higher high. And we said that we wanted the market to come back to retest this point here. Now, in the process of the market coming down, we have spoken about rules of M's and W's. The market created an M, right? Then broke the neckline. So from here, they will expect the market at least to come to this high here. That's why I see I have a target here and slightly above, another target slightly above. Why? Of course, actually, I expect GBPUSD to reach here, but it has not reached since my risk-reward ratio was already hit there. So I had to just move out of the market. I didn't want to stay into the market longer because I do not control the markets, right? As long as my rules are met, I exit the market. So the market created an M in the process of coming to retest this level here. So what are the rules of M's? The market has to go and retest this level and then to react. Either it can give you double bottoms or a higher low. Are you getting it? Before proceeding. So you have to make sure that you understand this. This is what exactly was happening here. So allow me to just clear everything here so that I can show you exactly what we're speaking about today. So we wanted the market to come back to this level here. Just going to mark this, right? Just allow me to replay because we spoke about it when it was here. Actually, when it was here before it started pushing down. So this is, in this case, this is our area of interest. We're in a trending market. We're waiting for a continuation. In case you want to trade this, it is also okay. Those of you who trade reversals. So what do they say that we want to check out for? For example, if you wanted to trade this reversal, you're going to go to H4, right? We want to look at a trending market. Now, when you come to H4, the market is trending higher, high, higher, low, higher, high, higher, low, higher, high, higher, low, higher, high. So here, this was the last time the market made. So you wanted the market to come and touch this point, for example, and react to it to create for you a higher low. When it breaks it, let's just do it practically. So if the market had touched this point, right, and reacted to it, then maybe coming back here, that's when you'll be taking your sell drops to this point here. If not, you'd wait for the market to go below this low here. Remember, we're using this trend upwards to look for a sell. So you're looking for the last low the market created. If it breaks it, then you're looking for, but you can look at this risk-reward ratio is slightly small unless you're scalping. I know some of you are looking to just scalp a few pips or to stay in the market for a short period of time. You could utilize this, but the best place to take from is either this one here, or if the market reacts here, goes back up, then you can take that trade. This is for people wanting to trade this reversal to this point, though I wouldn't recommend you to do it. I'm just showing you how to implement what I've just showed you. So I see the market went there. So you can also see it first a bit played on people's emotions before finally starting to push down, right? So you can choose where you want to take the trade from. Now, in this case, the market, this was the reversal. Now, when you go to, let's go back to daily because we got the structure from daily. Now, when you come back to the daily time frame here, you can see it has touched our entry. Sorry, it has touched our area of interest. I've just showed you guys how you take this reversal. Though, please, I only recommend if you've traded for some time or you understand your rules, you've put your rules in place. That's when you can trade these retests here. Or if you just want to practice them and backtest, it is okay because we get experience by doing things, right? So you can just, for now, if you're still new, just be backtesting. Are we together? So you can see how exactly the market, of course, it manipulated a bit as long as it didn't take out our stop loss area and then it dropped nicely, right? You can see the stop loss, this would have given us around a 1 to 2 point something, right? So now, in case you wanted to trade this continuation higher, just like we did, what do you have to do? You have to focus on this movement downwards here. So in this case, what are we interested in? This was the market making lows, lower highs, lows, lower highs, lows. You have to know to identify which is the last high, the last valid high. Then it have to be any low, any high, or any low in case you're looking for a sell. There are certain rules to identifying this is the correct low or this is the correct high that the market is going to break and then it reverses, right? So in this case here, all the levels have been tested all the levels have been tested, meaning that this is the last legitimate high that the market has to take out before we can trade it for the current where the price is right now, right? But in case the market also reacts here and then makes a low, meaning that it will shift from this one to this one here. Are we together? So let's check exactly. Please be attentive in case I'm very fast or you're not understanding something. Watch it more than once so that you can get it. So in this case, you can see the market came and reacted to this level here. Are you getting it? Let me just change the color to green so that you don't confuse it. So the market reacted there, right? Tried a bit to go back up, but again broke back down. So let's see what the market does. The market again comes and makes a new low, right? Now, what I want to emphasize is now, whenever people see that the market has taken out this level here, they start thinking that, the market is now going to continue. It has made a week out here, so it has changed structure. It's now maybe going to test somewhere up here and then it breaks. Maybe here, most people use order blocks on it. So the thing's going to come here because some people believe that when the market makes a tail here, it has broken, right? Because when you go to a smaller time frame to show you that there's a break here. But actually, if you've watched the entry video that I've recommended you to watch, you realize that actually this was a false breakout here. So let's go back to H4. So the market, in this case here, the market made a false breakout, so meaning that we don't have a valid high. So we need the market first come and test here. In case you're scalping and you understand these levels, you know the market is going to come back and test here. So you can utilize that to know that the market has to buy up to this level. So you can see the market came and tested here. So in this case, our last valid high now is this one here, right? Because it was the last test that the market did. So I'm just going to shift it to this level here. The moment the market breaks above, then we shall be taking our buy, right? So also, if you're a risk taker, you know that if the market broke, our entry model is that if the market made a false breakout and came back, properly test this level. For example, we got a structure from the daily time frame. You know that when the market comes back here, you'll fill your order just exactly from here, but you'll need to hold some drawdown. For example, if you just took your trade from here, and of course, our target is, when I go back to daily, your first target is going to be, it's going to be this high here. Or you can, if you want, you can put the neckline, but let's just put it on the high here. Then when you go back to H4, where we're marking our levels from, you can see that we're still testing in the untested level. Of course, your stop loss has to be below that wick there. I like having 1 to 3 at least, minimally. So now, since you've gotten your structure from the daily time frame, and you've marked your levels in H4, you know that this is the last high that the market has to take out. Or if you're a high risk taker, this is the first entry that you take. I've taught you guys how to use this untested level or a false breakout model. That's one of the best entries I like using to take my trades. You can clearly see the orders already filled us in. But of course, we know here we may have to endure some drawdowns, right? So let's see how the market plays out. So the market comes back a bit down. Again, makes a false breakout. Again, fills it in. If you're someone who likes trading multiple positions, this is another entry for you. So people who want to play it safe, remember the rule of this video are looking for the market to take out the last high, which we identified as this one here, right? So I'm just going to wait for the market also to break here, above here. Or since you want to be very safe, you look for the highest point, which is this one. But the moment the market closes above here, then you'll be looking to take another position for a buy, right? So I'm just going to, let's see how the market plays out. The market came back down, almost taking us out. Don't mind if it takes you out. Of course, I took this trade. It didn't take me out because it didn't take out these lows here. It attempted, but didn't take them out, right? Because I used this daily level here to mark my stop loss. You see this area here? My stop loss is just slightly below this area actually here, just slightly below this area. Because the market could come back and we had a small false breakout, so the market could attempt to come back there. So when you, let's see how the market plays out, right? So this is the first time the market breaks this level of ours, right? This is the first time the market breaks this level of ours. If you want, you can go back to H1 since we used the daily time frame. Remember, the daily time frame entry is H1, right? So here, in this case, you can just wait for a retracement, either to this green line here, because we had the highest points here. It can either retest here, and then you take your entry. Of course, you'll have to endure if it's to come back and retest this level here. But we're just waiting for it to come back to this level, and then you can take your now safe entry. This is what I call a safe entry, right? So in this case here, this point will be your entry point, and then you remember you're targeting that high. But of course here, the risk is a bit high because the market may want to come and look and test these levels here. So make sure your stop loss is below here. So in this case, you're going to find yourself having maybe a 1 to 2, especially for the daily traders. We had 2 positions. We had one here because it was meeting our entry rule. And then also the second one was above this level here. It was also meeting exactly what I'm teaching you today, right? So if you traded GBP and you were waiting for actually this setup, this is how the setup played out. And you can see even the current movement of the price is just, it went and hit the targets. But I just wanted to show you exactly how we treated it and how it performed for us, right? So if you did not watch the previous video, this one may not be easy for you to get. Or if you've understood it, also you can watch the previous video so it can make much more sense to you, right? We're not just posting these things just for content. Of course, someone may look at it as content, but this is exactly how we trade the market every day, every week. Of course, we may not get setups every day because our style of trading is a bit a swing model, but you can change it to suit your style of trading. Apply the same things, you can just change the time frame. So if this video made much more sense to you, do not forget to give us the like button. And also, if it's your first time coming across the channel, make sure you subscribe. Have a great day and a profitable week ahead.